Hi, I'm Beth Reynolds. I'm one of the portfolio managers for the Income Opportunity Funds. We've structured these funds to meet the needs of small endowments and foundations. Endowments and foundations are required to give away 5% of assets annually. Clearly, the goal is to make this distribution without impacting principal. We've heard in the news recently that the largest endowment in the U.S. had record donations last year totaling $1.2 billion. However, between spending and investment performance, the fund was down $2 billion. Clearly, this scenario can't persist without seriously depleting capital. Our Income Opportunity Fund focuses on income generation and capital preservation, and we think it's a good vehicle for meeting the distribution and capital preservation needs of all endowments and foundations. This is a multi-asset fund. We're long U.S.-based large-cap equities and fixed income. The portfolio is hedged with a small short book, which we will use opportunistically to protect on the downside in times of stress. The fund is managed by Seminole Management Company, which is owned by Mike Mesner and Paul Shiverick. Mike and Paul have run Seminole Capital Partners, a U.S. long-short equity hedge fund, since 1995. This fund has been in existence since 2004, with average annual performance of 9%. We implemented the current strategy in April of 2016 to address the needs of the partners' foundations. After accumulating assets, Mike and Paul started their own foundations. They recognized the need for a fund of this type to meet the distribution needs of these entities. The majority of assets in the fund. Current assets under management are $100 million. We intend to add capital to this fund, but to grow to no greater than $500 million. This will allow us to remain nimble and rotate easily among sectors and positions. Mike Mesner and myself are the portfolio managers of the fund. Mike is a company founder and has over 30 years investment experience. I've been with the fund for 17 years and have been mentored by Mike during that time. This is the org chart for Seminole Management. We have 5 investment professionals, including 2 portfolio managers, a head trader, and 3 operations professionals. We use high-quality service providers, including Morgan Stanley as our prime broker since 1995, KPMG our auditor, and Schulte Roth as our legal counsel. By way of background, equity markets are up 825% in the last 30 years, benefiting many parts of the economy, including foundations and endowments. But we believe we're in a period of low growth and entering a low return environment for equity markets. The economic recovery in the U.S. is in its 8th year. Market multiples are stretched. The S&P 500 is trading at 20 times trailing 12-month earnings. An income-oriented, lower volatility offering is appropriate in the current market environment. So how's our portfolio constructed? We're buying primarily U.S. large-cap equities and bonds. We maintain gross long exposure to equities and bonds at 40 to 60% each. On the equity side, we're looking for companies that are generating free cash flow and returning that cash to shareholders. Our current positions have a dividend plus repurchase yield of 7%. Our bond positions yield in excess of 4% and have durations averaging approximately 5 years. On the bond side, we're looking for companies where credit quality is improving. On the short side, we're looking for companies with high valuations and slowing growth rates. As mentioned previously, we maintain a small short book, which we will increase opportunistically in times of market stress. This slide outlines our investment process. The most important segment to focus on is at the top. The firm has a 21-year history with a deep reservoir of ideas and the partners' 60 years of collective investment experience. This is integrated throughout all our day-to-day investment decisions. One of the best features of our risk management program is that the partners are invested alongside and have the majority of assets in the fund. We have a highly liquid equity portfolio. We maintain moderate leverage at 110% of gross exposure, and we stick with plain vanilla investments, no derivatives, options, or IPOs. Here's how our portfolio looked at the end of February. We were 45% net long equities and 50% long bonds. We have a 4% short position. We had 21 long positions and 12 short positions. Our equity positions had a 7.3% dividend plus repurchase yield, our bonds a 4.7% weighted yield to maturity, and a 4.4-year weighted duration. We are overweight financials, focusing on large cap banks and insurance companies. I wanted to draw your attention to this slide. This shows the cumulative net performance of our flagship fund, Seminole Capital Partners, since inception. If you'd invested $100 in 1995 in Seminole, it would be worth $2,000 today. That's an annualized return of 15.2% far in excess of the 8.6% return of the S&P during that period. This slide gives you a sense of the performance of our short book over time. In 2008, the fund generated a positive return when the S&P was down 37%. From inception, the flagship fund has captured 75% of the market upside and only 27% of its downside. These are our fund terms. We have a 75 basis point management fee and an annual performance fee of 20% of returns in excess of 5%. Redemption terms are quarterly with 45 days notice. We also have an option for annual income distribution, and we'll work with you to help you meet your individual needs. We're very excited to present our income opportunity funds to you. We feel they are the best investment vehicles for the continued success and sustainability of your endowment or foundation. If you'd like to learn more, you can reach me at 212-838-6055 or send me an email at ereynolds@seminolecapital.com. Thanks so much for your time.